So today we're going to talk about a stock that has come back from the dead. This stock nobody wanted to own a couple of months ago. One of the best stocks in the stock market. Nobody wanted to own it a couple of months ago. We're going to talk about that today because there's a lot of learning lessons about that, and also then we'll talk about what could be the next stock that could come back from the dead today. So hope that's a little bit useful for you guys. Before we do, if you are on the Patreon, I did just drop a exclusive video. We had a look at Game Realms after their earnings last week, so if you are on there, go check that one out. And as well as that, if you didn't see it yesterday, I actually did probably the record for a video on the YouTube channel, and nearly an hour and 40 minutes long video, and it was with HMS. So if you need something to watch when you're doing something around the house, a job around the house, or you go for a long walk, or you go for a long run, or I don't know, when you're doing something that you listen to something for a bit of time, stick your AirPods in, give that a listen, hour and 40 minutes long. And even if you don't want to listen to that, then go give HMS a bit of a sub there, because a really good YouTuber that is up and coming on from the UK, which is obviously great to see some more UK investors as well that are coming onto this platform here. So give that a bit of a watch. As well as that, eToro portfolio. I mean, obviously today, it's, which we're going to talk about, one of the stocks that's really causing this today, but up 37% at the moment, which is absolutely incredible to say that we just passed half the year. Brand new portfolio for 2025, created on eToro just for the transparency reasons, and to be a bit of a popular investor on there, and to be racking in a 37% gain this year. It's not too bad at all, is it? I had a bit of a quick update. I didn't know how much I was up in my personal portfolio, which is quite close to the eToro portfolio, but there's a couple of stocks that have a bit more of a weighting. Obviously because that one's been running for a really long time. You got the likes of SoFi with a bit more of a heavier weighting, which obviously had a good year. Audio Boom, which we can't get on eToro, and obviously that's had a really good year for us. But the personal portfolio is actually up 43% year to date, which is just. And I really thought after 2024, I thought we wouldn't have another crazy year like that. But we have, which is obviously absolutely fantastic. So, really, really happy with that performance so far this year. But again, on today's video, back from the dead. Which stock is it? Which stock has just come back from the dead? Google. Of course it's Google. Oh my days. What is going on with Google right now? So when you look at Google, in the last 6 months, it's up 50%. That's incredible. Like, for a stock to move that much, which is now a 3 trillion market cap, which I believe is the 4th stock to reach the 3 trillion market cap club. But for a 3 trillion market cap to go up 50% in that amount of time, insane start, amount of money really thrown into that stock to get it moving up that much. And just, what an absolute performer, since those April lows when the stock was $147, the has rallied up 70%. And even in September, you had a little bit of an opportunity to pick this up in September, and it's rallied up a lot since then. So you've actually had really 2 decent opportunities to buy Google stock. And if you have bought Google stock, you are certainly getting the rewards right now. And that's great for me because obviously the eToro portfolio, what is the largest position in the eToro portfolio? It's Google. What is my second largest position in my personal portfolio? It's Google. So this is obviously, one of the big reasons why we are having such a good performance this year is because of the rally that's happening in Google stock. I remember 5 months ago, I made a video on Google here talking about it, and I've made plenty of videos about Google talking, really positive about it. And now, the amount of times I was coming on the YouTube channel and saying like, look, this is, in my opinion, Google is probably the best company in the world, and the fact you're able to buy it on such a significant dip. You had the chance to buy Google down on nearly a 30% drop. Sometimes, those are opportunities that you don't need to think too long on. These are sometimes, one of the big opportunities that you need to take. And this, big statement. And, there's 2 reasons why I say this, doing this video right now. Because the first thing is that, as reminded the other day, is that, I always, one thing that I do on this YouTube channel, which is, I don't know if it's a positive or a negative, is I spend so much of the YouTube videos time pointing out, like, I like that opportunity, I like that opportunity, I like that opportunity, and I'm trying to find the next places to make money. And I know you guys like that as well, because you like it when I'm trying to just produce like stock ideas for you, basically. But as was pointed out the other day, and especially the reality check of when something maybe doesn't go well, is reflect on sometimes some of the opportunities that go really well. And Google is certainly that case. Google has gone very well for us as well. And it's not just a, We're not celebrating here like a normal position sizing. I was banging the drum, for the last year saying, look, I want Google to become my largest holding, and I kind of followed it through on the eToro portfolio, and I nearly followed it through on my personal portfolio, being able to get it to the second largest position. So I nearly got it there, and because of that, I was able to get the reward. But I could see here like the opportunity for Google was massive. But as we always see when we get given these opportunities about these stocks, I've said for a while that I think Google is probably the best company on the stock market, for quality point of view. The diverse business, the valuation that you've been able to pick it up at, the balance sheet that you've been able to get it for. And you get given the opportunity to buy the best company at a 30% discount. But as we've seen before, people don't want it. People do not want to buy the best company that is on the public stock market on a 30% dip. When it comes to it, how many times do we see people not buy those opportunities? All the time. And these people miss, some of the best opportunities to make money in the stock market. And the same thing I see, when the stock goes down and Google went down 15% and you start buying, and then it goes down 20%, 25%, 30%, and say all the time, whoa, it's a falling knife. So what if it's a falling knife? So what if you go down another 10% on Google? You're going down an extra 10% on the best company in the world already on a significant dip. You buy more. You just buy more of the stock and you make more money. And that also happens, and that's a comment I always see all the time, is like, oh, it's a falling knife. So what? It's a great company and you're getting it even more cheaper than where it was 2 weeks ago. You've got more upside. You buy. You just keep buying. And you get rewarded for it. And that's, another case with Google. But, so many times when there's these opportunities to buy these great stocks at great valuations, so many times people just don't buy them. Look at Meta. Meta is probably the best opportunity that we've seen so far this decade in the stock market. And in 2022, we had the opportunity where Meta went from a nearly $400 stock down to an $80 stock, falling 75%. This was an even better opportunity than where Google is right now. This, like I said, this is probably the best opportunity of this decade in the stock market. And Meta was sitting at $80, I think it was on Halloween of 2022. And people were saying, don't buy it, it's finished. They were saying it. And it wasn't even just like a couple of comments. We're not talking like, I remember talking about Meta, and I've even shown the videos before, and I've shown the comment sections, and people on those videos, 80% was negative on it in Meta. 80%. Like, that's setting in now, because it looks absolutely obvious right now, and you go, well, obviously it was a buy at $80. Back in when it was happening, 80% of people said Meta is finished at $80. And then we know the rest. The stock went on to return 743%, and now the stock is going to be, probably $1,000 stock soon. And I'm up a really good amount from Meta, and buying some Meta during that dip. And once again, it's a falling knife. Meta went from $400 down to $150. It's a falling knife. It kept falling. So what? If it's a great company and it just gets cheap, if it's cheap and it already gets cheaper, go buy them. And we saw the same with Google right now. Google was exactly the same, where there was just a couple of issues and it was a great opportunity, and you saw people coming out saying, I'm not buying Google, Google's finished, it's getting disrupted. It's ridiculous. This is the thing, is that in this game, you've got to buy when there's fear on the street. The best time to buy stocks is when there's fear on the street, when there's a good majority of people on a company with a proven track record and the financials are still holding up, and it falls historically to a massive discount to where it's normally at. You buy the great opportunities. And don't get me wrong, there's going to be, if you buy 10 of them, there's going to be 2 of them that maybe actually turned out to be something major. And you're like, oh, yeah, all right. And those people will shout out, well, it was obvious it was going to go wrong. But I tell you what, the other 8 or 7 or 6 that end up being right, and you get massively in the right direction and they perform very well for you, they will far outweigh the ones that you get wrong. And that's the case. That's the case. And that's what you see with Google. With Meta, you had the time where Meta, once again, this is one of the best companies in the world. Maybe not the best, but one of the best companies in the world. 12 times earnings. And on a forward P, it was like 8 times earnings. It's ridiculous. You should not be getting a company of that quality, at that sort of valuation. And people going around and they were saying, oh, Meta stock's dead. It's getting disrupted by TikTok. What a load of rubbish. Now, all these times they think that these 1 trillion, 2 trillion companies, and not even that, sometimes even smaller companies, people sit there and go, oh yeah, they're getting disrupted and they're just going to continue to sit there and keep getting disrupted. It's stupid. These companies that have such a proven track record and management teams with proven track records and with billions to just throw at some of the projects and create things like reels to combat, something like the TikTok reels. It's absolutely stupid. And we saw the exact same nearly happen with Google. Google didn't go as cheap as what Meta did. That was just incredible. I don't think we'll see anything like that again. But in my opinion, you had here Google the best opportunity in the stock market for like the last year and a half, where Google once again fell down to like what 17 times earnings. So you're already getting Google, the best company in the world, at a major discount at 17 times earnings. But on a forward P, it went down to like 15 forward times earnings. 15 forward times earnings for someone like Google. And Google, you've got a cracking balance sheet. The shares they're buying back. With like Meta, you can just got the social media platforms. Google, you got the search engine, you've got Chrome, you've got Android, you've got YouTube, you've got Google Cloud, you've got the free bet into AI, you get Waymo. So much of a better diverse company. So even though you look at Meta and go, okay, that was just absolutely ridiculous on evaluation, you can argue the case that maybe Google was even more of an easier opportunity because you look at the massive diverse part of the business that they have. So if something was to go wrong with business, the rest of it would have probably carried it out. And you look at today, and obviously it looks like a clear opportunity that you should have been buying, but during the time frame, people were fretting about this kind of breakup fears, which I don't think were ever going to happen. You look at the AI and people saying, oh well, Google's way behind AI. Yeah, and at the time, they got off to a bit slow start. But you think Google's just going to sit there? Google with a proven track record of delivering great products and the money they have to invest, they're going to sit there and just keep falling behind the AI race? What? And the thing is with Google is that, as I always come back to, is you've got to stay at the financials, because during this time, whenever the stocks drop, the narrative changes and they go, oh, it's a finished company. That's what happens. They go, oh, it's a finished company. And this is why it's always key to look at the financials, because if during these times the financials hold up, that those are clear, like, okay, maybe the market's getting a bit silly now. So when you look at someone like Google and the growth, if you look at the growth here, 13%, 12%, 11%, 13%, 15%, 13%, 11%, and then we're back into 2013. So Google had, for the last 2 years, maintained around about 11, 12, 13% revenue growth. There was no change. No big no big fluctuations in the growth. Nothing at all. Pretty much financially, the financials are going like that, and yet the stock price went like that. Sometimes when you get some of these wobbles, you do get the point of view where the financials just kind of go like that, but then the stock price will go whoosh, big massive dip, even though the financials are only showing a little wobble. Google had nothing like that. Like when you stare at the financials of Google, they didn't even blink. They just continue to carry on expanding. And the point where you have a company that shows not even a wobble on the financials, and yet the share price has that. Those are the really easy ones to be buying when there's a lot of fear. And I don't know if it's because people panicking over the AI situation, but I see this quite often. There's a lot of stocks at the moment right now that it seems to be getting thrown out at the moment because of this AI situation. It's like, well, the AI situation at the moment, it's going to be a bit of a disruption, and a lot of companies are throwing a lot of money into it to try and get a great AI product. But let's not pretend like some of these companies are going to be absolutely disrupted, where next year they're doing half the revenue of what they're doing right now. Like, it's going to be a slow process before these AI products come, major, revenue products. It's going to take 3, 4, 5 years before we get to that point of view. But yet some are getting thrown down so much right now because, maybe the AI product isn't that good. Well, if it's not that good right now, I think they've still got another 3 years to make sure it's a decent product yet. So I don't know what we're panicking for at that moment. But yeah, it's just crazy, absolutely crazy. And I said on the video today that I said I'll point one more out for you. The next one I'm looking at, and I'm thinking, I'm seeing exactly the same, where the market's being ridiculous with it, and yet financially they're still absolutely crushing with it, and the narrative changed because this is going wrong for them, and the stock's dropped down, and now nobody wants to own it, and it's like, you're being a little bit ridiculous there. And in my opinion, right now, Adobe is that opportunity right now in the stock market. Adobe right now, from where this stock was, a $600 stock, has now fallen to $346, nearly down half its value in a year time frame. Half the value. Like, just think about that for a second. Half the value of it wiped off. Can you imagine something losing that amount of value? Like, you would be looking at the stock and the business and you're thinking, there's something going wrong massively. For a company to lose that much value, there's something got to be massively going wrong with the business. And yet there isn't. But yet you've got this narrative with someone like an Adobe, for example. And, people are saying, oh, well, Adobe, it's getting disrupted by the AI now. So, no one's going to use Adobe anymore. That's the narrative around Adobe right now. And it's like, well, look at these products and how much are AI making up that much amount of revenue. Not many at the moment. And same again, you look at Adobe and you think, okay, this is another example of a company that's maybe a little bit behind in the AI product side here. But how many years is it going to come before Adobe becomes like a mainstream AI product, another editing program becomes a serious AI product where everything can be done on that AI platform? It's still quite a while away, isn't it? It's still very much a while away before it gets to that point of view. And once again, what's the point of view like Adobe? A 147 billion market cap. And they know this is going to be massive space for them, this AI sort of business. And you think they're going to just sit there and let the business get disrupted? Once again, an absolutely amazing balance sheet. Are they just going to sit there and let them get disrupted? And the same again, you look at Adobe. What difference has happened to the Adobe platform? This is where I talk about, like, the share price of Adobe, massive drop. But then you look at the year-over-year quarterly revenue growth, you're looking at something in the business where you go, wow, look at that. You can see why the stock dipped, right? Look at the revenue growth here. 10%, 10%, 11%, 10%, 10%, 11%, 10%, 9%, 10%, 9%, 10%, 12%. Okay, I'm back in 2022 now. So I've gone from 3 years. And what I've taken you to there is 2022. Well, you know where Adobe was in 2022? It was a $616 stock. You know what it was in 2024? It was a $627 stock. There's no fluctuations in those financials where the stock shows that it should be down this much. I understand, okay, the stock maybe should be down 10, 15% because maybe should be a bit better on that AI product there. But as we know with the market is just so emotional. The market will throw stocks down 50% on something really small. And that's a great thing with the stock market. That's why the stock market is the greatest wealth builder that you can have. That's why you can make serious money in the stock market, because the stock market can be ridiculous. It can be emotional. It can throw stocks down 50% when there's no fluctuations in the financials, because it sees this little threat coming in and it goes, whoa, that's going to wipe 50% off the market cap. Now, like I said to you guys, Adobe might be the one that's the 9 or 10 or the 2 out of 10 that, okay, they get it wrong. And Adobe is disrupted by AI. But what I showed you earlier is that quite often Google, Meta, AMD, SoFi, Hims and Hers, these companies here, is that quite often, if you get the 8 out of 10, are great performers. And you look at someone like Adobe as well, what we talk about Adobe, where it's just stats, the market throws it down that much. On 2025 numbers now, you got Adobe at 16 forward times earnings. Now, when we were talking about Google got to 17 times earnings. So Adobe isn't exactly there with the likes of Google at the moment, but give it another 3-4 months, and if Adobe closes off the full year and they do hit towards 16 times earnings, then I will say Adobe is nearly as good as what opportunity you might have had from Google a couple of months ago. Now, the only difference between Adobe and Google, the big difference I would say between them both, is that Adobe, the diverse business model isn't as good as like a Google. So obviously with Google, you had the Waymo and the YouTube and everything like that. So Google is a bit better of a company than Adobe. But Adobe, you're still getting good growth, the editing program, great balance sheet as well. They can do the big share buybacks. So you've still got a lot of things that are very similar to where Google are at. So it's maybe not as good as company as Google. Certainly a good company though. And you'll be getting it kind of to levels where Google got to once again. Now, if Adobe does fall down to 14 times earnings, then we're talking okay, maybe because it might not be as good business as Google, but the discount is even bigger now. Okay, that might be worth it. Where it might be just as good because it's even cheaper now. So with Adobe, I think Adobe this is like another one example that's just going on right now, and I'm actively building a position in Adobe. And I think like over the next 3 months, if it does get to that 16-fold times earnings, well, yeah, I'm a big fan of Adobe if it does get to those hot levels. And I think I was saying with Google, I'd like Google to come in largest position, which I got pretty close to. Adobe is not largest position, but I'm very much at the moment trying to get Adobe into the top 5 holdings. And then if we get into another 3-4 months and I still see the stock around about the same share price, or the perfect situation, it gets cheaper, or that falling knife continues to fall and you give me Adobe even cheaper, that's the point where I'd actually consider maybe Adobe coming into a top 3 position. So yeah, that's where I'm going to go with Adobe, is that I'd like it to probably start building up into a top 5 position, and then if it stays here and I come back in a few months and it's either the same or cheaper and they're still financially executing, I might actually push it onto a top 3 position there. So we'll see what happens there with Adobe anyway. So yeah, hope you enjoyed it. Bit of a reflection. Well done to any of you Google shareholders. I'm sure you're having a good time at the moment. And also, I don't like just doing a victory lap. I want to give you guys as well a little bit of this is what I'm looking at now as well. So that's everything. Hope you enjoyed it. Hit the like button. Thanks for watching. See you in a bit.